let's bring in Shane Obata for his take on markets. Shane, thanks so much for joining us.
Thanks for having me.
Have you been selling any bank stocks or lightening up on your exposure to the financial sector?
Not too much. I think we're generally underweight banks as a firm, so that's been beneficial this week. But I think we're more looking for opportunities in the sector, maybe not specifically banks, but looking at different companies such as Blackstone, Brookfield, one of which I'm going to talk about later. So.
Okay.
Yeah.
You are interested in growth stocks, broadly speaking?
Well, the firm does equity income, specifically, for generally speaking, but within certain pockets of the firm, for example, we have some sustainable focus strategies. Those ones will have exposure to clean tech, for example. That's not often not going to give you a dividend. So.
That's interesting. So you're at Middlefield. Sorry, I should have known this. You're very much about an income mandate. That's what your investors come to you for?
Yes.
Oh, that's
broadly speaking, yeah.
Right. So that's been a bit tough with this rapid rise in interest rates in the sense of holding equities that provide a big income have been under pressure.
Yeah, it has been. And I think a broader theme here that we're focused on really is just rates volatility. It has been so high, right? And I think markets across the world, real estate, infrastructure, private debt, et cetera, from what we're hearing, it seems a little bit locked right now, right? Because you have big bid-ask spreads in the sense of people having a hard time coming to an agreement on pricing. And I think that's a reflection of the uncertainty around rates. So
in the fixed income market?
Well, in different markets, in real estate and, like I said, private credit as well. So basically what I'm getting to is I think that we know inflation is still a little bit uncomfortably high, but this week has made it maybe more difficult. We're going to see what happens with the Fed. But the point I'm trying to get at is I think when rates volatility comes down, that's when people can start to get a better idea of pricing of different assets. Mm-hmm. Just to say, okay, the hiking cycle is over. If it is soon, let's start repricing things. People will get a little more accustomed to things. And we're seeing some indications of that in U.S. real estate, for example, right? People were coming back into the market as rates come down, then they went back up. They're pairing back. It's just the uncertainty, right? So I think as that becomes a little bit less volatile, that should really help the broader markets. It should help deal making, and I think that's an important theme.